Hey, everybody. Good evening. It is Thursday night, and it's the evening after Amazon announced, among a lot of other announcements. Smaller companies, but they're really interesting. So I wanted to be sure we covered them. Android PC gameplay is on. He wants to talk a little Elf Beauty. And it looks like Elf Beauty announced. I wanted to take a look at that one. I'm not a big beauty guy, but we'll take a look. And we'll take a look at Amazon. We'll take a look at Affirm and a couple of other stocks. So the market today, this whole week's been a little bit unusual or hard to follow is better term. Nvidia didn't do too well on Monday, Tuesday. It's done well for a couple of days. Microsoft's kind of just been plateauing. Apple's been plateauing. Amazon was good today, but bad after hours. Hey, how you doing, Sergio? And looks like Logan, 32-year-old investor from Alabama. Awesome, man. Well, really glad to have you, Logan. Thanks for checking in. I'm really glad that you like the content. Please ask a lot of questions. And if there's any stock symbols you want to take a look at, please put them in the chat. All right. So I'm going to talk about Amazon. Last time I looked, it was selling off after their earnings. The earnings had a lot of good in them, but it also had a lot of CapEx in them. And I think that CapEx is what's beginning to drive the market a little crazy. Financials did quite well. A lot of green here, especially among the banks. Man, it's nice to see Citibank's up 3.61. It's one of my stocks. So good stuff. Meta just keeps going up. Go Meta. Just getting bigger and bigger. Good to see. Healthcare down day. It was a pretty depressed day for healthcare, and energy was down. So, earlier in the week, I think healthcare did well. Energy was doing better. So it's a little bit of give and take. When we look at sectors, the number one sector is still communication services. Big thanks to Meta. Meta's just been getting it done, going up in value. Netflix and all those materials is showing up. Healthcare still up there, but they had a bad day today. And then financials is there. So overall, the big stocks, the top three are in the red for the year. Nvidia's had a really good day, but they had a lot of room to make up, a lot of ground to make up, I should say. Amazon had a good day today, but we'll take a look at where it's at after hours. Then Meta, 21% year to date. Good deal. Very good. Very good. Other notable names that are really doing well. Walmart's doing well. Eli Lilly, JP Morgan. Those stocks are really creating more wealth for investors. So today, the biggest name that announced was Amazon. And let's start with Amazon and kind of see what we have. So I read through Amazon's announcement. Their revenue is always incredible. It's incredible to consider how big these guys are and how they continue to grow. Right now, this isn't loading the fourth quarter. It's only loading the third quarter, but this kind of makes the point. They are huge. In the quarter, trading 12 months, $620 billion of revenue. And they're going to surpass Walmart as the highest revenue company in the United States. So even with that massive revenue amount, they still grow 2-digit growth rate. That's so impressive. That is not lost with me. Now, the piece that really was a problem for me was, they're growing. They grew 10% in the quarter, 11% for the year. Just impressive, right? $638 billion of revenue. That's massive. Growing 11% is basically you're growing by like $60 billion plus. That's such a big revenue amount. And that all looked great. Cash flow is much lower than expected because they increased their CapEx spend by $30 billion in 2024 as collectively for the year. And they're saying they're going to spend $100 billion in 2025. Investors are getting their head around that, saying, you know, AI, Amazon's saying that AI is going to be an opportunity of a lifetime. And it sure may be. It sure may be. But it's a lot of CapEx going out the door. And that's a lot of money that they're putting into the data center. And AI still hasn't created a whole lot of revenue. So for how much longer are we going to give Amazon time to get this thing going on the AI front? We shall see. That was the biggest problem with the earnings announced. Everything else, I mean, the company is awesome. But after I was able to load the new revenue amounts, my new valuation on Amazon with its a new price target of $200 per share, I think they're 16% overpriced, priced too high. So I am holding on Amazon and until I think the stock price settles down some. And if it goes up, good. I own the shares. I'll just watch it go up. But I'm going to wait another quarter before I buy any shares. And unless the shares, the price comes down substantially. So Logan bought 625 Amazon in March 2023 at 90-ish. Attaboy. Nice job. Took profits at around 160. You know, if Logan, I know you may have just started following my channel, but I did something similar. I bought Amazon and I sold. And that was one of the big regrets. And I got back into it because it had a big pullback. And I got back in as soon as I had a chance. Because Amazon is one of those companies, like there's probably 5, 7 companies that I just want to own because they're going to be the most valuable, important companies for the next 10, 20 years. Amazon's one of them. They're just so darn important. So good deal that you bought the stock. You had a big win. But I agree with you on this one here is one that, you just want to hold. So I'm going to hold it. I'm not going to sell it on this occasion. I am sitting on a gain. I bought it the right price and I'm good on it. Now, Amazon, I'll probably give it a quarter. I think at this point, the 3 hyperscalers have announced, and they're saying that they're spending all this CapEx. In a way, NVIDIA is happy that, hey, look at all the revenue we're getting. But the market's reaction, if we look at the most recent price quote, the market's reaction to Amazon, Microsoft, and Google Cloud is you're spending too much in the data center. You got to bring it back. You can't spend that kind of money without showing AI revenue. So that for the future, I think for NVIDIA is going to be a headwind. I just can't see that these companies are going to keep ignoring the market and letting their stocks kind of sell off like this. Maybe they can, but it's a pretty good risk. And maybe they're all looking at each other and they don't want to blink. They want to keep spending on the data center so their competitors don't gain an advantage against them. But I don't know. I think AI, the whole DeepSeek story of AI being less expensive and so forth, that certainly reshuffled how people are thinking of AI. AI was supposed to be this super expensive thing. Now it could be more practical, less expensive. So we'll see. Amazon certainly spent the money. They want to spend the money on CapEx. If they keep spending at those levels, it might be that the Amazon stock sells off considerably because investors are not going to like that. They'd rather see a clear path to continued growth in free cash flows, continued growth in revenue, good profitability, and so forth. So Amazon was a positive earnings overall, but From an investing perspective, investors do not like it. We'll see how it trades tomorrow. So along with Amazon, yeah, in Logan, that's when I bought this past summer and got back to like 160. That's when I bought back in, and luckily I was able to get back in. That was one of the regrets that I had, was selling Amazon, because it just felt like, yeah, I made a gain, but wanted to get back in. All right, so one of the stocks that I wanted to take a look at, and I thought what I could look at is three companies that are similar: Affirm, Upstart, and SoFi. And kind of compare the three. And to kind of lead things off, let me show you a chart where we have all these are fintech companies kind of doing finance a little differently, where you're providing loans to people. And Affirm is in the blue, Upstart's in the gold line, and then SoFi is in this aqua blue greenish line. And you can see that they kind of follow each other for the past year. For the past 5 years, that chart doesn't look all that great. But you can see that Upstart's been performing quite well at times, but the one that is in the lead for the year is SoFi. Now, Affirm is up nicely in the after hours. It's up like 15%. So it's going to narrow this gap. But for the past year, Affirm is up 42%. Not bad. Upstart is 95%. Awesome. And then SoFi, 89%. So all three have been winners, but which one is the best investment at this point? Well, let's take a look at some fundamentals, and I'll state my position on it. So Affirm announced today, and the stock in after hours is up about 15%. When we look at Affirm, it was founded by Max Levchin, and he was part of the team that created PayPal way back when. I think that's where he created some of his wealth. Then he started this company. His intent was really to have a new way of lending using a lot of technology. Now they would say it's all AI. Yeah, that's fair. When they first started the company, they didn't call it AI. They just were using algorithms and technology. What you could say is AI. Okay, sounds good. General volumes have gone up 31% for the fiscal fourth quarter. Revenue went up 48%. Those are very good growth. Net income improved. It improved by 161 million. They still lost money, but it improved. So they talked about how they're acquiring customers and customers are coming back. So that's good. Trying to get to a financial statement in their earnings. This is all pretty and stuff, which is great, but I'm an investor. I would just want to see financials and try to get to the reality of the business. All these fancy charts, it gives the company, kind of a lot of creative liberty to kind of express it or put the numbers in a way that may look even better. I just wanted to look at schedules, and we finally have the first schedule. Okay. It's not quite an income statement. Geez, come on, guys. You said this was an investor letter, not an investor book. Okay, balance sheet. Finally, we got some real hard numbers. So cash position went up. Wait a second, June 30th. Did I open up the wrong financials? Maybe. Hopefully I didn't go on a wild goose chase here. Fourth fiscal quarter 2024. Okay. So that was the fourth quarter. So I don't get why they're saying June 30th, 2024. Okay, so that's Q4. Okay, so we're in Q2 25. So they have a new fiscal quarter. So I opened up the wrong financials. So let's take a look at this. So shareholder letter. I'm going to try my luck on this one. See if I can get some financial statements right off the bat. And of course, they put a lot of data. I mean, I'm not going to be sore about it, but it's like, geez, man. You know, when attorneys try to hide information, they send like the other attorney team that they're opposing, they send them like boxes of information. That's kind of how it feels here. You're giving us way too much information. Just give us the financials when you do your earnings. Instead, they give us all this quarterly. I don't care about reconciliations. Transaction costs, really? Whoa. Income statement reconciliations. Well, these guys are making it hard to analyze them. Let me try the shareholder letter. All right, cool. I think I'm on to something here. All right, here we go. Sorry for the delay, folks. So this is 3 months ended December 31st. Okay. Very good total revenue growth. You're going up about 275,000 on a $591,000 million number. That's very good. They are profitable now. Very good. 25 cents a share. That is excellent. Cash flows. So for the 3 months, they had $312 million of cash from operations. How much CapEx do they have in there? So here's the CapEx. So 43 million. So when we look at their cash from operations minus CapEx, it'll give us our free cash flow. So that is 312 million minus 43.9 million. So we are going to be at $268 million of free cash flow for that one quarter. So that's for I guess it was Q2. That looks really good. So they're growing revenue. Now they are profitable. They were growing at a really good clip. And I don't think I could use that schedule. I'm going to try to find the balance sheet, which was probably ahead of the income statement. Just check out their cash balance is 1.2 billion. Looks good. $1.2 billion looks really good. So their financials are looking really good. They look like they've made the turn to be cash positive, to be profitable. They're loading up with cash on their balance sheet. That looks really good. They probably don't have a whole lot of debt. Yeah, they do. They have about as much debt as they do cash. 1.151 billion in debt. Okay. So $268 million of free cash. If I were to annualize that, we're getting to about $1 billion of free cash flow. And at their growth rate, they're a really high growth company. So I would multiply that number times about 30. So I think this business is worth around $30 billion. And right now their market cap is 19 billion. Tomorrow they're going to be a lot more because a 15% rise, 15% on top of this. Let's imagine tomorrow they're going to be about a $22.5 billion market cap company. but I think they're worth in the neighborhood of $30 billion. So this one here might be worth taking a look at and keeping an eye on for me. It's looking like a good stock to consider, that it could have a good rise. Analysts think that it's fairly priced just with a 2% discount. And after you adjust for this big pop in the stock, it's going to be priced at a premium. 17 analysts cover the stock. There are some analysts that are very optimistic at $82 price targets. And then some analysts do not believe in this business. They say it's only worth $20 a share. Now, the growth rates are expected. They have a fiscal year that ends at the end of June. It looks like their next fiscal year will end this June 30th. And for this year, the revenue is supposed to grow at like 23%. That's good growth. And it's going to keep growing. And it's going to keep growing. So that's really impressive growth. So this stock here looks really good. It looks like it's on its way. It's not totally bid up. Like SoFi and Upstart look like they really took off, where Affirm hasn't had a tremendous rally. Up 42%. I think it could go up another, I would say another 30, 40%. If the market continues to really like them. Obviously, they really like their earnings. So Affirm is looking really good, looking like an interesting stock to consider. Let's take a look at the other two. Now, Upstart did not announce. They're going to announce next week on the 11th. So I believe that's Tuesday. They're only 5.9 billion in market cap. So smaller market cap than Affirm. The revenue is 605 million. They are still losing money. Their forward PE is 274. Wow, that's pretty high forward PE. These guys are $589 million in the trailing 12 months. And actually, they're 605 million in revenue over the trailing 12 months. They're growing at 11%, not quite as well as Affirm. So Upstart's not looking as good on the revenue growth. When we look at they're losing money. Okay. They do have some free cash flow in the trailing 12 months. They've reached I guess they were cash positive before. They went negative. Now they're back to cash positive. They have very good gross margins of 74%. Profit margin is still negative with they haven't attained profitability yet. It looked like the forward P was positive, so they are expected to turn a small profit in their current year. So this one here is riskier because they're smaller. They haven't made profit yet. They just started cranking out some free cash. So I'm not liking this one as much. And that 100 million in trailing 12 months, it's hard to see a trend there because it just started to be cash positive. Affirm was a little more established. So this one here, it's hard to get this valuation. It's kind of an educated guess. Is it going to get there? You can guess at it, but it can't get there with numbers. So 9 analysts cover Upstart. The most optimistic analyst has them at $100 per share. The worst, $22 a share. So the difference in price targets resembles kind of like what we saw for Affirm. There's some people that really believe. There's some people that really do not believe. And then on average, it's fairly priced. Funny how that works. So Upstart is going to end up being profitable. This is not all that interesting to me. I think the company needs to get a little more established and really prove themselves far better. Now, the revenue growth that I was seeing this number. I guess I'd have to understand, how are they going to start growing at 35%? Are they coming out with a new product? Did they acquire somebody? I'm not I don't know enough about the company to know what's making that big step up in revenue growth. Because if they grow at 35%, well, that gets a lot more interesting. And they're supposed to be profitable this year. Okay, that's interesting. The PE is going to be fairly high, but then come down as they grow into that PE. So this one here, it's worth keeping an eye on, but the stock did go up a lot. It's gone up a lot in the 1 year. So you're kind of paying a high price for the stock. So right now, Affirm looks better to me than Upstart. SoFi is similar. They also do lending, and they do lending in a new model. They're 16.21 billion, so comparable to Affirm. They do have profit, net income. Their PE is 59, forward PE. What was Affirm's PE? They didn't have one. So they're still unprofitable. So that's the advantage goes to SoFi there. SoFi is really showing profitability already and is starting to establish a track record. Over the 1 year, it's gone up 95%. The one thing that is concerning is, did the stock really appreciate too fast? SoFi, their growth, revenue growth, excellent, 27.8%. Just really good growth. Yeah, excellent stock. They don't have free cash flow yet. They are profitable. They've begun to be profitable. 18% margins. Very good. Yeah, SoFi looks good. I would say that, SoFi is priced quite high. It still seems like Affirm is interesting. I think Affirm has got really good fundamentals. I could see that there's a discount there. It got the attention of the market. It's really bidding up the stock by 15%. Growth rate looks good. The idea looks good. Everything's clicking for Affirm. So of the three, I would say that Affirm probably has the most of my attention. I'd be most interested in analyzing that. I've analyzed SoFi, and I came up thinking, well, there's other investments out there that I'd rather have. And I know some people that watch this channel, they like SoFi. Good for them. They're up on the stock really well. But I'm going to analyze Affirm and probably do a video on it. I like what I'm seeing. The market likes what they heard from the earnings announcement, and it looks really interesting. So I'll take a look at it. All right. So looks like we've got some more people joining. Omar, check out FMC. What is FMC? Mike, the dividend investor guy. Yeah, let's take a look at ELF. Yeah, let's take a look at it. Brian, good to see you again. One big today in the after hours trading on MPWR. Cool. I've been adding LMT and MRK this week. Curious what you think of GD. Operate in the space with LMT. Yeah, so let's take a look. GD. We'll take a look. I forgot what company that symbol belongs to, but we can take a look. All right, so let's take a look at ELF. Let me close some of these browsers so I don't confuse myself. ELF Beauty. Oh man. 24.85 drop. They announced some of the headlines here. Let's take a look here. ELF Beauty stock drops after cosmetics maker trims outlook. Guidance is soft. Citing TikTok ban saga. LA fires headwinds. Oh man. Interesting. Okay. So I don't know if this is going to show me yeah, it did. It loaded the earnings already. Very good. So revenue growth is very strong, 46.27%. And wait a second. 12 months, fiscal 2024. I guess this is the first quarter. Okay, that's fine. So if we go trailing 12 months, 46%. So let's look at the quarterly. And the quarter they just closed, December 31st, 31% growth is very good. That's a good growth rate. And when we look at net income, they were profitable. It did go down. Profitability did go down, but it's still profitable. The cash flow isn't there. Not a whole lot of cash flow. So that's a ding against them. And profit margins were low in the last couple quarters. So the guidance is probably what's really hurting the stock. The revenue looks really good. I mean, that revenue looks pretty darn good. They are a smaller company, right? They're 1.3 billion. So growing by those rates is impressive, but it's not like they're a giant company that's growing at that level or at that percentage rate. So this one here is really settling down in the after hours. Man, it's just the stock's getting destroyed, down 24.85. The forecast analysts, 16 analysts cover the stock. There's some analysts that are very optimistic on the stock. Some are not so much, but there's price targets still above the stock price at the close of the market. Now it's going to open, if everything holds the same, it's going to open at $66.50 tomorrow. So this is highly discounted according to analysts. The fundamentals look good to me. You have very good revenue growth. Here's the revenue. Looks like their fiscal year will end at the end of March. And if you include the March 31st quarter, they're going to grow at 31%. And then next year, they'll grow 16%, 14%. That's still really good growth. Earnings per share will also grow. The fundamentals look good. The fundamentals look really good. The stock has been selling off and will continue to sell off. Man, this stock is getting destroyed, but the fundamentals look okay. Look at the forward PE, 22, and it's going to soon to be better because it's going to drop. And this company's growing at 31%. So I would think that the stock would do better than that if it's growing that much on the top line revenue. So I know the margins aren't great, but it's still growing really well. And that's Elf Beauty. I don't know, Mike, if you know, if you're putting your finger on what is the problem. So you think it has something to do with the tariffs, huh? Could be that if they make their cosmetics in like China and they're going to have to pay a big tariff, that could be a problem. Yeah. Dragos. So you like Palantir Long? There's the next guy, Shadow Guy, Palantir Long's report. Cool. Yeah. Palantir is crushing it, man. That stock is amazing. And when I look at the fundamentals, I mean, I guess you can't look at the fundamentals because the fundamentals tell a different story. But the stock just has caught everybody's attention and a lot of people are investing in it and it's doing great. So congrats if you own the stock. Stock still moved today, up 9.79. It's up in the after hours. This thing is not going to stop. It's going to get to like $1,000 per share. I don't know. We'll see how far it goes up. That's pretty incredible. It's a $253 billion market cap company. and their revenue is less than 3 billion. That's pretty incredible. You're paying on the current year 585 PE. Wow, that is pricey. Forward PE 199. Analysts are saying it's 33% priced at a premium. It's overpriced by 33%. My valuation is even worse, but I'm not even going to comment anymore on that because I've been wrong on where the stock's going to go. You look at the revenue growth, 28.79. I showed you that, Amazon, the big giant company, is growing at 11%. So 28.79 over the trailing 12 months is not like incredible. The quarterly, they are accelerating growth, which is very good, but they're still a relatively small business, $827 million of revenue. So we'll see. Maybe they just keep accelerating their growth and just get bigger and really grow into that really expensive valuation. So this company here, the revenue growth, if we look at the trailing 12 months, it's call it 29, and they're free cash flow generating, very good. The best I can do is like multiply that number by like 30. And so I get to like 33, 35 billion. These guys are way above that. So profit margin 16. So they are profitable. They have good gross margins as well. Where is that line? 80% gross margins. That's excellent. So Palantir is just, man, incredible rise in this stock. When's it going to stop? Maybe it'll never stop. It'll just keep going up until it's $1 trillion market cap. We shall see. Over the 1 year, it's up 565. Wow, incredible. Over the 5 year, 1,400% rise. Very cool. Very cool. Dragos might buy Elf dip for a trade. Interesting. So you've been riding Palantir since 1677. Nicely done. Congrats. Nice. So Vikram. Bill, is that like the stock symbol, Bill? Bill Holdings. Whoa. Oh my God. Did these guys announce today? Yeah. Oh man, this stock's getting crushed. 29.43. Wow. So for the 1 year, they're up. And I covered this stock not too long ago. It's on my channel. They really had a nice rise from 54 up to 90. Wow, that's really good. But now they're going to settle back down to 68. So they're going to go way down to here. What happened? So I'm curious to see what happened there. So Bill is a software as a service company. They develop software for small businesses. So core revenue increased 16% year over year. Total revenue increased by 14%. Okay. So 14% growth. They are a smaller company, so I could see that might be underwhelming, not impressive enough. Okay. And the stock price did jump up quite a bit. So this is all second quarter stuff. Total revenue, 362 million for the quarter. Gross profit was really high. This is a software company, a software as a service company. So they make a lot of money. They're very profitable. So they have 481,000 businesses using their solution. They're made for small businesses. Okay. And the financial outlook. So they're going to grow year over year by 13 to 14%. That's not bad. Okay. Operating income net, they are going to be profitable. That's not bad. So why is the market flipping out? Why are they crushing this stock? I'm not seeing like a big giant problem. Free cash flow. Okay. So these guys are loading up their balance sheet with cash. They have over $2 billion of cash here. And do they have any debt? So they have debt here and debt here. So they have about $1.7 billion of debt plus this. So call it 1.8 billion. But they have 2.1 billion of cash. So balance sheet looks good. So balance sheet looks good. Their revenue is growing nicely. First 6 months, they're getting bigger. So the cost of revenue, service cost, their gross profit, they have a very high gross margin. So it looks really good there. They keep making their product better. Total operating expense. Okay. Man, the reduction in the stock price doesn't seem rational to me. And here's the statement of cash flows first 6 months. It's $167 million of cash from operations. And where's their CapEx? They don't have any CapEx. Capitalized internal use of software. Well, I guess you can call that CapEx, but they probably don't have any CapEx. They just expense everything through R&D as a software company. So they have about $167 million of free cash for the first 6 months. If you annualize that, we get up to about 330. And 330 at their growth rate, I would say this business is worth like $6 billion. What's their market cap right now? Yeah, they're at 10 billion. So maybe that's a problem. They were just bid up a little too fast. They're going to come down 30%. So they're going to come down closer to where I think this business is worth. But boy, that is a correction, huh? Boy, that's a tough one. That's a lot of money lost for investors. It was probably fun to see a stock go up from 54 to 96 very quickly in really 3 months. And then it's going to come back down. So not a fun night for Bill Holdings stockholders. I think it's a good company. It's just the stock price has just been, man, look at this stock. It was really bid up during COVID. It came back down. It started to work again. And now it had a day like this. This is a small stock, so I doubt we're going to get any like good press coverage on it that explains what happened. But that is what is going on with Bill. All right. Yeah. So Palantir is a software company. Yeah, they're working. Palantir is probably working with everybody or a lot of companies. So we'll see how that plays out. Dragos. Okay, cool. Got it. So the big revenue deceleration is what's freaking the market out. Yeah. And it's a small company. They had, if you look at the history, this stock, its history is where it really sold off. I mean, severely, right? It was priced up here at $300 a share. It made it back close to 100, but it went from like 300 to 50. man, investors lost over 80% of their investment from that big fall. So I can understand that, hey, this stock has sold off before, and they're not, I guess they don't have a track record of sustaining their stock price over the last couple of years, especially. So interesting. So Omar, you're going to go big up on FMC. So let's take a look at it. And then Pedro Miguel, hey, Evolution Ave, stock, good earnings. So we looked at that one. So we'll look at Evolution AB after we look at FMC and a couple of others. So FMC Corporation, agricultural sciences company, provides crop protection, plant health, professional pest and turf management products. It develops and markets and sells crop protection chemicals that include insecticides, herbicides, and fungicides, and biologicals, crop nutrition, and seed treatment products. So these guys probably compete with Monsanto and other companies in the agriculture business. Wow, it's down 41%, but look at this drop. It announced on the 4th. It dropped 36% in the last 5 days. Wow. It's a $4.45 billion market cap company and dividend of 6.5%. Price target is 61% higher than where it's currently priced. Wow. All right. So revenue has been decreasing, it looks like, for 2 years. It decreased a lot in 2023. It's continued that deceleration. But if you look at the last 3 quarters, there's some green on the screen. So they're beginning to grow. Single digits, but there's growth. There is growth on the screen. So that's not too bad. So this is for the full fiscal year. That's good. And they are profitable, although their profit has come down substantially. And they do have free cash in the current year. Gross margins of 38%, profit margin of 8%. Single digit growth, mid-single digit in the last 3 quarters. So these here, so you have free cash flow, $603 million. So this business is probably, let's take a look at their balance sheet, see what kind of cash and debt we're dealing with. So they have $357 million of cash, $3.37 billion debt. So roughly $3 billion of debt. So this business is worth about $3 to $4 billion, just high level. And they're priced at $4.45 billion. So this one's a pass for me. They weren't really doing much. And then starting in 2023, they just started to drop. Their margins aren't really exciting. If you're going to get into sciences, you can get into some pharmaceutical companies that have 80% margins, gross margins, that are far more profitable and are actually really growing nicely. I own a couple of biotech companies that are just doing great. So I'd rather go there. This one here seems like it's a losing proposition. So I would pass on FMC. It sounds like you may be going big. I'd be curious to see what's leading you to think about investing, because I'm seeing fundamentals that show that this company may be priced a little too high as it is. The earnings per share could show that the company could be valued higher, but Charlie Munger, the great Charlie Munger, he never used earnings per share because he felt that management can really manipulate that number. They can hide things and do reserves and do accounting that can really influence earnings per share. That is true. I don't think it happens a whole lot. It does happen. But free cash flow, it's hard to manipulate. It's free cash flow. It's cash flow. And that's why free cash flow is so dependent on for valuations. And that's why I use it as the principal valuation on my investments. And I also look at earnings per share. But earnings per share looks good, but these guys don't drive a lot of cash. So they're just not inherently all that valuable. So this one's a strong pass for me. Looks like their revenue growth is expected to begin to grow low single digit, mid single digit in the future. This business does not look that attractive to me. Their margins are not high enough and so forth. So it's a pass for me. Good luck with it. Good luck with it, Omar. Hopefully you make a bunch of money and come back and go, man, I found the next Palantir. I hope that's the case. All right. So we move on to MPWR. Monolithic Power Systems. Ooh, it's riding high. It announced 11% in the after hours. Wow, it really fell off a cliff here. Went from like $900 a share down to $660. Wow. That was a rough time here. It happened October. So the last time they announced, they just crashed down. Wow, what a drop. And year to date, stock's been working. It's going to go up another 11%. So not bad. Not a bad start to 2025. They had a good earnings announcement. They're expecting Q1 revenue to be above estimates on AI demand. So Monolithic Power Systems engages in the design, development, marketing, and sale of semiconductor-based power electronic solutions for the storage and computing, automotive, enterprise data, consumer communications, industrial markets. Okay, cool. Okay, good. So they're a semiconductor company and they're in the right space. They're in the data center. But I mean, they've had a rough time. Just for the 1 year, you're breaking even. You're riding high and then it collapsed on you. Year to date, it's looking good. So these guys, they announced, and the announcement isn't there, but it sounds like they have better growth. Now, the piece that I continue to read into, like Microsoft announced, hey, we're spending a lot of money, a lot of CapEx, and they got hit by the market. Like, hey, we don't like what you're saying. We think you're spending too much money. And then Google came out. They're the other big hyperscaler. Same story, same result. Stocks being sold off. And then Amazon came out and said, oh man, we want to take advantage of the biggest opportunity in our lifetime. Their stock's selling off unless things have changed. Let me take a quick peek. So what I'm alluding to is these companies need to slow down their spend in the data center. If they keep doing what they're doing, they're going to keep seeing this. The market's going to be like, forget you guys. Call me when you start making money on AI, and then we'll invest in you. If you're going to put a lot of money into something that might work, then we're going to sell your stock off. And maybe that matters to Amazon. Maybe they don't care, and they're going to keep spending for a year because they know that it's going to work out. That's cool. But if it doesn't work out in a year, then you're even in deeper trouble. The market was right. You shouldn't have been spending all that money. And now your stock's really going to get hit hard. So these are some of the smartest people, right? Amazon, Microsoft, Google. But all three stocks were hit hard. So that is what's going on in the data center. So as it relates to this stock, it's cool that they're up. Boy, this has been I'd call this a roller coaster, but I think people would die if you had a roller coaster that dropped this much. This has been kind of a this thing was, you know, had cardiac arrest and it managed to get a pulse again. Now that it has a pulse, it's moving up. Um, I wouldn't invest in this. Me personally, I just think there's too much risk in here. They're growing. Okay, that looks okay. Um, $32 billion market cap. Free cash flow, 678. So yeah, this stock, I mean, I'd value it, I'd get to like 13 to 15 billion, and they're priced up at 32 billion. So I would pass. Just out of curiosity. Short sellers are not in the stock right now, but boy, if they were in it before it dropped, they made money. The shorts did. But now we'll see what happens. Looks like the stock's moving up, but it's had a rough year. Evolution AB. So am I looking at the right stock? Evolution AB. Develops, produces, markets, licenses, online casino system. 12.5 billion. This is in British pounds. PE is low. The current year, not available for next year. So they just, when did they announce? January 30th. So it's been out there for a little while. And free cash flow, 1.2 billion. Looks good. And what are they growing at? Revenue growth of 23%. Very good. So what kind of cash and debt do we have here? A lot more cash than debt. Beautiful. This stock's discounted by a considerable amount. It's worth about 25 billion. If I look at cash, multiply it times 20. No, actually, I got my numbers wrong here. So if we take cash, I did have my numbers right. So yeah, it's worth about 25 billion. And they're only priced at 12.5 billion. Why are they selling off? They're growing. They pretty much, it's a winner for the 5-year, but for the 1 year, it's selling off. They're growing really well. They're getting bigger, establishing scale. They have good cash flow. Gross margins 100%. So it sounds like they license things. Profit margins of 56%. What's there not to like? There's a lot of things to like here. So this looks really good. It's a good looking stock. Is there a story behind it? Like, is there a problem with the company? Are they in some type of legal problem? Those are the only things that I could say. There's a cloud over the company that is negative press, but the other things look really good for the company. I'm going to look a little closer into it. Yeah, this looks like a really good stock, really good company. Good luck with it. So the Chinese are streaming their casinos, their online casinos. I think they can solve it. Huh. Interesting. Just out of curiosity, let me see if they have a website here. They don't. Okay. Got it. Yeah, interesting company. Their fundamentals look really good. I'm just like, the fundamentals look great. I'm just like, why is this stock selling off this badly? Is there's some bad news out there, and they're located in London, and I'm not seeing a lot of good information here. So I'd have to dig in and see what kind of negative stories are out there, if there are any. It looks good to me from a fundamental perspective. The Asia market didn't grow, unfortunately. Okay. That could be part of the problem. All right, cool. So, all right, so the market, let's see where it's going to open tomorrow. The futures are looking pretty flat. Yep, looks pretty flat. And Amazon is the biggest news. It looks like it's going to open 4% down. We're getting into 2025, right? The big story is going to be, is the AI, is AI going to start showing some profitability? It is becoming fairly, in some ways, impressive. Like I was telling some people that I'm very impressed with like Meta AI as well as these other free AI apps. I mean, I ask questions, it comes back with some really good details. So I give it that much, but I'm not paying anything for Meta AI. I'm not paying anything for DeepSeek. I'm not paying anything for Gemini. So if they're going to give this to me for free, thank you. And ChatGPT, I don't pay for ChatGPT. I think other people do, but you get the same result from the other ones. So I don't know for how much longer they're going to be able to charge any money. If people are giving away this service and you want to grow users, you're going to have to give it away. So if this stuff's free and it ends up being free because these guys want to get users, how are you going to monetize it? And the stuff that people are trying to charge for, like the Copilot from Microsoft, it hasn't been very successful. It's kind of was a big flop. And then Apple tried their Apple Intelligence, flop. A lot of these things are flopping. So if this turns into a big giant nothing burger AI, then there's going to be a lot of spend out there that businesses are going to have to rein in. And we'll see how quickly that happens. All right. Well, thanks for tuning in, guys. I appreciate it. Appreciate the questions. Hopefully you found the live stream interesting. And I hope you guys are making money here in 2025. I'll try to stream next week. I'm probably not going to stream tomorrow, and just cover a couple of stocks with recordings tomorrow. And then we'll have the investor call on Saturday as well as on Sunday. That's for paid members. We'll get together and talk about stocks and topics. Should be a good one. We had 2 good sessions last weekend. Look forward to having 2 more good sessions this weekend. So with that, everybody, have a good night. Thanks for tuning in, and good luck tomorrow.